Well, as we wrap up a big tech earnings week, it feels like all we've been hearing is the latest on AI investments, and companies are making big bets on the technology. But will it meet some of the lofty expectations? To discuss, let's bring in Yahoo Finance market domination anchor Julie Hyman. Hey, Julie.
Hey there, Brad. Basically, it has to.
Yes.
As I wrote in this morning's morning brief newsletter, when you look at the huge amounts of these companies are spending, basically these efforts have to succeed. It's almost, as my editor Ethan Wolf-Mann wrote, the AI spend is too big to fail. So much is riding on it. And just to put some numbers around it and what we've been hearing about this earnings season thus far, Meta raised its CapEx forecast for the year to $37 to $40 billion. Microsoft spent $19 billion last quarter. Amazon spent $30.5 billion in the first 6 months of the year. So just to give a few examples of those big spending numbers, Alphabet wasn't as clear about what it's spending and what it expects to get out of it. We've seen some of these companies get punished when it hasn't been as clear what the return on investment is going to be. Meta has been sort of the outlier in that because the perception has been that they are seeing some fruits of their AI spend when it comes to advertising and other efforts on the platform. But you do have to worry about the sort of bias, if you will, Brad, from these companies. They'd say how much AI is transformational, and so they spend all this money on it. But then even if it doesn't turn out to be transformational, they're motivated to make it so, right? Because they've spent all this money. And there's still a lot of optimism within the industry. I mean, we talked to Patrick Moorhead the other day, who's a tech analyst, and he's still confident that even if it takes a little while, they'll figure out how best to optimize AI and what it's for.
Right, the pivot,
right? But it is, there are still a lot of questions, and there are some on the street who have been asking the question of, what are we going to get out of all of this?
Right. What is the return on investment, and how do we kind of see it in our everyday lives tangibly? And for investors, how do they really maximize on the shareholder value as a result of that? And does it take the amount of time that it took for Cisco to prove to the street that it could grow into its valuations? And speaking of those valuations, we had talked about lofty valuations with Stacey Rasgon yesterday, and he was talking about the difference between lofty numbers and lofty valuations. Not all of these companies being, expensive, as he was looking at a company, a poster child, in NVIDIA, and saying it's actually quite a bit cheaper today than it was before the run started. But, it really comes back to, are the earnings actually achievable for what these companies are investing in?
Well, in the case, NVIDIA, when you look at where they are in the different parts of the stack, of the AI stack, if you will, NVIDIA is getting all that upfront investment. Then you have the cloud companies, the Amazons, the Alphabets, the Metas of the world, the Amazons of the world, who are then using the chips to build out all of that capacity. Right. Then there's the next wave question of enterprise software companies, right? A ServiceNow has talked about productivity gains, but they're going to be under more and more pressure to quantify that and to prove that they are getting those productivity gains and that it is adding to their business. Yeah. And if they're spending so much, there's going to be a real motivation to justify that spend. And I think investors and analysts need to take a real hard look at whether they're actually getting out of it what they say they are.
Yeah, excellent context, excellent breakdown. Julie, thanks so much for joining us here on Wealth. Appreciate it.